Wicks and bars, shadows. Share the screen. So, when you're looking at the candlestick version of the chart, of course, each bar that you see here is a candlestick. And we talked about the time frames earlier, the M1 for the 1 minute chart, M5 5-minute chart, H1 1 hour chart, D1 daily chart, W1 weekly chart, monthly chart. So whichever time frame you're on is letting you know how much time it takes to complete one candle. So on a minute chart, you're going to see one of these go up every 60 seconds. On the 5-minute chart, you're going to see one every 5 minutes, and so on and so forth. Now, when you're in the lower time frames, of course, you're going to see a lot more price action. But keep in mind that from the bottom of the chart to the top represents the smallest amount of pips on the lower time frame. So here we're only looking at 12 pips from the bottom to the top because it's a JPY pair. We're looking at the first and second numbers after the decimal to calculate the pips. All the other pairs that don't have JPY involved, it'll be the third and fourth decimal after the third and fourth digit after the decimal. So a lot of action, but not a lot of pips. And watching the lower time frame, especially when you're just starting trading, it can kind of make you pull your hair out because what is it doing? Is it going up? Is it going down? The higher you go on the time frame chart, the more consistent and reliable the information is. So when you're trying to read patterns and trends by looking at these candlesticks, you generally want to use the higher time frame charts, but you'll be able to kind of get a feel for which time frame works best for you. Now, like I said, each candlestick represents the time on the chart, but you will have a box, and then some of these you're going to see the lines coming out at the top and the bottom, or maybe just the top or the bottom. This is called the shadow or the wick of the candle. Now you want to pay attention not only whether the line is on the top or the bottom, but how long the line is. Now if you see a long line or a long shadow on top of, well, first of all, the top and the bottom of the candle represent the opening and the close price. Now the shadow appears when there is fluctuation if the high or the low for that time frame is higher or lower than the open and close price. Now when you see a long shadow at the bottom of a candle, it usually means that a price rise is coming because it has hit support and started to come back up in that time frame. And on the other side, if you see a long shadow or a long line on the top side of a candle, it's usually going to go down because it has hit resistance and come back down within that time frame. Now you'll be able to look at the shadows on the candles and anticipate the price move based on 1-stick indicators, 2-stick patterns, 3-stick patterns. And you want to learn these and memorize them to the point where you see it instantly. When you're looking at this, you would have known that because of the shadow here and the long shadow here, you would have caught these pips. So make sure you are paying attention to the time frame on the chart is going to determine how reliable your information is. And make sure you understand how these candlesticks work. The candlesticks actually give more information than any of the other types of chart, like the bar and the line chart, which are also great. But you can see a lot more by looking at these candlesticks. So keep the training going. Let's see what we have for you next.